Base metal producer Central Asian Metals has reported a more than doubling in first half revenue and profits following the acquisition of a mine in Macedonia. Chairman is Nick Clarke and he joins us now around the table. Nick, welcome. Good to talk to you. Good numbers that we saw released recently, but of course you also own big low-cost copper production in Kazakhstan. How's the half year gone for you?
Well, it's gone very well. The metal prices were strong in the first half of this year. Copper, lead and zinc were strong from a price environment, although they were dropping throughout the year. And since the period ends, since the end of June, we've seen further drops in metal prices, anything between 12 and 20% in terms of the metal prices. However, the first half of the year was very, very profitable. Our gross revenue was up 165% on the same period last year at $102 million. We maintained our EBITDA margin with an EBITDA of $64 million for the year. And so that shows the strength of the business in depth. Obviously, we'd been running our Kunrad project in Kazakhstan profitably since 2012, which has enabled us to pay a dividend since 2012. And that's something we continue to do. And the acquisition of Sasa late last year has only really...
Macedonia project, which is what, lead and
zinc. It's an underground mine, lead and zinc, which we acquired in November of last year. Again, it's a low-cost producer, and that's obviously contributed to the 165% increase in the gross revenue for the first half of the year, but also it is a low-cost producer of lead and zinc, and so therefore our EBITDA margin at 63% has been maintained, enabling us to pay and announce a 6.5p dividend for the first half of this year.
Costs do appear to be creepy up, and depending on how you read these, some reports are they're up quite a lot. But I think overall, it's a 1 cent increase in costs. Is it?
Yes, the production from Kazakhstan, from Kunrad, comes from some dumps that we irrigate and leach and recover copper. Now, hitherto, most of our production, and we've produced over 75,000 tonnes of copper from our Kazakhstan asset. Hitherto, the production has come from one part of these dumps that we leach. In April of last year, we started leaching from a location about 8 kilometres away from the plant that we constructed, and so that production now requires slightly more power to pump solution backwards and forwards, a bit more labour. So there was about a 5 cent increase on a per pound of copper. And in the first half of this year, about 64% of our copper came from this new area that we're extracting copper, as opposed to the area where we've produce most of our copper. So 5 cents of the increase is actually down to just pure more power and a bit more labour. But the 53 cents that we announce actually compares to the full year last year of about 52 cents per pound. So it's very much in line with our expectation, very much in line with our guidance, and continuing operations, we're looking at those early 50s as a C1 cash cost.
Yeah, I want to get on to the copper price in just a minute if I can, and base metal prices generally, but how's the second half started this year? Well,
the second half, in terms of production, is fine. Kunrad continues to produce copper at its guidance rate. We expect to come in between 13 and 14,000 tonnes of copper. Previous 2 years, we've achieved 14,000 tonnes of copper. And Sasa, which we've now owned for coming on for 8-10 months. The first half of this year, we produced over 11,000 tonnes of zinc in concentrate, and the lead is about 14,500 tonnes of lead in concentrate, which is very much on guidance, and we expect this year to absolutely, both in copper, lead and zinc, produce our guidance numbers. Countering that is obviously a drift down in the metal prices that we've seen really since the beginning of the year, but most importantly since the end of the half-year period, since the end of June. We've seen continued drops in the copper, lead and zinc price.
My understanding is you're also looking to expand your portfolio, is that right? You're looking for acquisitions at the moment. Is it just waiting for a question of something appealing coming along, or are you actively searching out something?
We started operations at Kunrad in 2012. We've been paying dividends since then, and about 4 or 5 years ago we started to look for other opportunities. It took us 3 years to identify Sasa, this underground mine in Macedonia, as being worthy of attention, and ultimately we acquired it late last year. So we've spent the last 10 months since we acquired it assimilating that operation. We've brought in a new COO, Scott Yelland, who's ex of Shanta Gold, to run our operations. So we've beefed up our technical management team, and so we're getting comfortable now that Sasa is now part of the stable of CAML. Operationally, the culture is as getting to where we want it to be. So that gives us time now as a management team to start to look what next. And obviously, I could never say absolutely we've identified something, because, as I said, Sasa took 3 years to find. But in the last few months, we've already visited a couple of opportunities. We have more in the pipeline. We've signed, I think, 5 or 6 NDAs, non-disclosure agreements with parties looking to sell assets. So we are looking now. But if you were to ask me, have we identified anything yet? No, we haven't. But what I'm trying to show is the intent of the group to look for that next opportunity. Mostly copper, do you think? Or, I mean, you've got another couple of copper assets, or projects underway, I think Chile and also another one in Kazakhstan. Well, the one in Chile is held for sale. It didn't quite meet our investment criteria, so we've decided that we'd hold it for sale. We've got an exploration project in Kazakhstan, Shuak, that we're currently drilling out. That's looking at an oxide resource, which is a surface type deposit with a similar SXEW processing facility such as we built at Kunrad. So we have the expertise in Kazakhstan to actually build, if indeed we find a deposit worthy of developing and taking further. But I think the next transformational change is to look at a bigger project, possibly an earlier stage where some exploration has already been done, and the next stage is to finance and build a project. That's one option. Or indeed, like Sasa, which we bought, an operating mine with fully developed underground access, 700 experienced labour force, and a fully permitted mine. That's like a bolt-on EBITDA, a bolt-on cash flow machine. So we'd look at anywhere between an operating asset and more greenfield, but certainly with resources in the ground.
Just base metals there.
Look, ideally copper would be the first pick, and then coming down to lead and zinc, because I think copper has very, very good fundamentals. Notwithstanding the latest price drops we've seen, all the experts, all the mineral economists will tell you the fundamentals for copper are still very strong. It is suffering somewhat in headwinds with trade wars and tariff wars and uncertainty, but ultimately copper is a red metal that is going to be central to our future growth and industrial well-being. Yeah,
with the copper price in mind, let's take a look at the share price of CAML, as you say, Central Asia Metals Limited. This is where we are, and of course this drop we've had here since the high point we saw, when was it, back in March this year. How much of that has been the copper price, or is that all the copper price, do you think, that drop?
I wish I could give an answer to that. Obviously, I think there's a bit of uncertainty in the marketplace as to how our first half numbers would turn out, and I think our numbers that we published yesterday vindicate the acquisition of Sasa. It shows how financially robust and strong it is. Our revenue numbers, our EBITDA numbers are very strong for the first half of this year. So I'm not sure that the share price really reflects the strength of the business throughout. We have seen a bit of an uptick, but ultimately the headwinds of lower metal prices, if you choose to be copper, lead and zinc, and at the time they are tending to drift south a bit, then ultimately you pick up the uncertainty from the market. Let's be clear, there's quite a bit of uncertainty in the market at the moment about in the resource sector.
The trade deal.
And the trade wars. But we as a company on AIM, I think we lead the way. We pay a dividend. We paid 6.5p for the first half of this year. We've kept all our promises to the marketplace. We are, I think, quite highly regarded on the AIM market for being a company that does deliver, certainly on its production targets, on its cost targets, and on its dividend payment. And I think that that sort of operational management style is not necessarily reflected in the share price at the moment. Look, all CEOs will tell you that the market undervalues their shares. I'm not going to complain about the market. The market is where it is. I do think that if there's an uptick in the metal prices, our share price will rise very, very quickly.
At these low levels, relatively speaking, copper down and so forth, if you saw a good asset, would you sacrifice the dividend? I'm not quite sure what your dividend strategy is at the moment. Would you sacrifice the dividend to put the money into an acquisition?
Well, look, our dividend policy, prior to acquiring this asset in Macedonia, we had a very simple dividend policy, which was we would pay back 20% of our gross revenue to share a minimum 20% of gross revenue to the shareholders from our Kounrad operation. Now, until we acquired Sasa, we'd actually paid back closer to 30% of revenue. To date, with this final dividend, we've paid back 83 pence to shareholders in the last 6 years. We raised money at 96p. So, you know, we paid back an awful lot to shareholders, even though we're a small company. Now, our success and our growth and the support we get from the institutions is very much based around a steady income yield from our dividend. You asked the question, would we sacrifice dividend to acquire something? We would not set out with that intent in our mind. We would always set out to try and acquire something, issue some shares if needs be, as we did with Sasa, borrow money if indeed that is the most appropriate thing to do, so we get the right leverage on our balance sheet, we don't get too much dilution, and we try and maintain our dividend payment, which is what we've done with Sasa. So ideally, that would be the situation. In extremis, you know, I think if the absolute slam dunk asset was out there, then obviously
you'd look at the options.
We'd look at the options, but that is not our #1 plan.
Yeah. Look, it's a pleasure, and thanks for updating us on the first half. And looking forward, perhaps, maybe to catch up with you on the full year.
Absolutely.
Nick Clarke, it's a pleasure. Thanks indeed. Nick Clarke's chairman of Central Asia Metals.